There are many ways to change the world. We often talk about improving healthcare, education, access to food. But what about banking? Most conventional banks have a primary responsibility to increase value for their shareholders. This means their primary intention is to be profitable, and that the financial return on investments drives the decision-making of these banks. These banks tend to standardize financial products to lower costs and to focus on short-term profitability rather than long-term sustainability. In the 2007 to 2008 financial crisis, we saw the ways that conventional banking can bring down the global economy. But can banks really lift up our global societies? Today, there is a small but growing community of banks that seek to use finance to address the social and environmental challenges facing our societies. We call these just banks. Just banks use their unique position as intermediaries in the economy to funnel money and invest in people, organizations, businesses, and communities that work to build a more just, equitable, and sustainable society. Just banks are not doing this type of finance as a corporate social responsibility project alongside their normal banking activities. This objective defines the core of their business model. While they also must get a return to sustain themselves as a business, their primary goal isn't to maximize profits, but to achieve social, economic, and environmental well-being in the communities they serve. They add the question, what kind of impact will this investment have on the world? Impact can come in many forms: poverty reduction, reducing carbon emissions, increasing affordable housing stock, growing local sustainable food systems, or providing banking services for underserved markets. Ultimately, this mission is enabled by the shareholders of the bank and requires the bank to not only be deeply embedded in the communities and movements it serves, but also to be very transparent about what it does and does not finance. Banks decide the future of our society because they decide which projects, businesses, or initiatives get financed and which ones do not. Just banks take this role seriously. In addition to funding good projects, they think and act on a more systemic level, building movements, connecting key innovators, and facilitating spaces to allow good ideas to flourish.